Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing L3Harris's stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 42 billion market cap. They're trading at $2.19 a share, and they have 190 million shares outstanding. L3Harris specializes in surveillance solutions, microwave weaponry, and electronic warfare. It was formed from the merger of L3 Technologies and Harris Corp in 2019. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow looks terrible. It goes down every single year from 2.3 billion to 1.1 billion. Margins are also decreasing from 13% to 6%. It is possible for free cash flow to go down and margins to go up because the calculation is pegged off of the revenue. Net income is the profit or loss on the income statement. It's revenue minus expenses. That was 1.8 billion in 2021. It dropped to 1.1 billion in 2022, and then it's pretty flat after that. Revenue is the sales for the company, and that goes up a little bit from 18 billion to 20 billion. Their revenue per share is 106. Each stock price is 219. Price of sales is stock price over sales per share, so it's about a 2. And they pay a 2.1% dividend yield, which cost them $900 million. They do have enough free cash flow to cover it, but not by that much. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flow, past year 4, that's 47 billion. We discounted the numbers back to today using the weighted average cost of capital. We get a value of the company of $41.3 billion. We divide that by 190 million shares, and we get a calculated stock price of 217. They're trading at 219, so they're trading at a 1% premium. It's a sell according to the model. There are 70 companies in the same industry as L3Harris, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They don't spend too much in CapEx, 400 million. It is higher than the average. Debt to equity ratio is 0.7, which is equal to the average. They pay a good dividend, 2.2%, double the median. Lockheed pays the highest, 2.7%. They generate a good amount of free cash flow, 1.1 billion. They rank 8th in market cap. They're trading at 2.3 times book value. That is better than the median. 36 times earnings, worse than the median average. 36 times free cash flow, better than the average but worse than the median. And 2 times revenue, a little worse than the median. They generate $20 billion of revenue, almost triple TransDigm, and they're growing a lot. Their 5-year annual revenue growth rate is 25%, a lot higher than the median average. If you put $10,000 into this company 10 years ago, you'd have $35,000 today. That's a 13% annual return, a 246% total return. Let's take a look at their most recent 10Q. We'll start with their income statement. Revenue, 5.2 billion. Up from 4.5 billion. Let's see if they give a breakdown of the revenue. Here's a breakdown of the 5.2 billion. 3.6 billion is product revenue, 1.6 billion service revenue. And they break it down by segment. In space and airborne systems, 1.8 billion, 1.2 billion in products, 500 million in services. IMS, integrated mission systems, 1 billion products, 600 million services. CS is communication systems, that's 1 billion products, 270 million services. And AR is Aerojet Rocketdyne, 350 million products, 185 million services. They also show the cost of revenue per category. So the cost of revenue is lower in each category than the revenue, which of course you would expect. But it's hard to tell which one has the best margins. Maybe their CS division. Let's go back to the income statement. Below revenue is cost of revenue. These are all the expenses directly tied to generating the revenue, 3.9 billion. General and administrative expenses, 1 billion. Operating income, 378 million. So they have a lot of expenses, pretty low margins. Their net income is 285 million. EPS 149, down from 177. And they did decrease their shares outstanding, 190 million last year. Now it's a little under 190 million. Let's look at a balance sheet. Current assets, 8.3 billion. Current liabilities, 8.4 billion. So current ratio is a little below 1. They don't keep much cash on their balance sheet, under $500 million. Receivables $1.2 billion. This is when they sell a product or service, but they don't get paid. They sell on credit and will get paid in the future. Contract assets are similar to receivables, $3.5 billion. Inventory $1.5 billion. Assets held for sale $1.1 billion. An asset held for sale is not being used by the company and not being depreciated. Its dollar amount on the balance sheet is the lower of carrying value and fair value. Here are the assets held for sale. So you can see goodwill, inventory. So it looks like they're selling a business unit. Carrying value is the cost of the asset minus depreciation. Fair value is the value of the asset in the open market. Half their assets are goodwill, $20 billion of goodwill. Here's a breakdown of their goodwill acquisitions by division. The biggest is IMS, $6.6 billion, then SAS, $6.1, CS, $4.9, AR, $2.5. Their big acquisition is AJRD, Aerojet Rocketdyne. That was in July of last year. The total purchase price was $4.7 billion. And they financed it through a note, a $3.25 billion note. They pay 5.4% interest on that note. And that note has 3 expiration dates, one in 27, one in 33, and one in 53. And the remaining funds came from a drawdown under their 2023 credit agreement. So total assets $42 billion, same as last year. Total liabilities $23 billion, same as last year. Their biggest liability is long-term debt, $11 billion. I did a video the other day on L3Harris. They tried to acquire Aerojet Rocketdyne, but the US government put the kibosh on the deal, and they wouldn't let it go through. I think they felt it would become too much like a monopoly. They would have too much control. So they let this company acquire them. But here's a breakdown of their debt. You can see $350 million is due this year, actually due last week. And here's the interest rate on the debt. Not much is due next year, only $600 million. And then a couple notes in 2026, $650 million. Assets minus liabilities equals equity, $19 billion of equity. They raised $15 billion from selling their business. They profited $3.2 billion from running their business. Let's take a look at the statement of cash flows. Operating cash flow is negative $100 million. Last year it was positive $350 million. Let's look at the investing section. Last year they spent $2 billion. That was on Aerojet Rocketdyne. This year they spent $115 million of PP&E, more than last year of $71 million. And they borrowed $2.2 billion on a note, and they used that borrowing for the repayment of other debt. They added $800 million of commercial paper, paid down $200 million of commercial paper. They bought back $233 million of their own stock. Last year was $400 million. Dividends of $224 million. Let's look at a company on Simply Wall Street. Its last price $225, $42 billion market cap. Up 1% in the past week, up 23% in the past year. Let's see what they say about the company. L3Harris provides mission-critical solutions for government and commercial customers worldwide. Their integrated mission systems segment provides intelligence, surveillance, and reconnaissance systems, passive sensing and targeting, electronic attack, autonomy, power and communications, and networks and sensors. They were formerly known as Harris Corp and changed its name to L3Harris in 2019. L3Harris was founded in 1895, based in Melbourne, Florida. Here's the stock price since they started trading in 1990. So it was real low back then. It grew to 60 in 2007, then as low as 28 in 2009. Then from 2009 to 2020, it ran up past $200. Came down to 150 in March 2020. And then 2 years later, in March 2022, it hit its highest point, 270. It did fall to 160 about 7 months ago, but it's come back up to the low 220s. Simply Wall Street is really bullish on this one at $3.80 a share. 22 analysts priced this stock at $2.49. The revenue forecast for 2024 is $21 billion, then $22 billion, then $23 billion. Free cash flow forecast is $2.2 billion, then $2.5, then $2.9. Look how low their revenue was in 2013. Then it jumped way up in 2019, $7 billion to $24 billion by 2020. 2019 is when Harris Corp and L3 Technologies merged. But the revenue has come down since then. It's now a little over $20 billion. Their debt and equity were really close in 2013, and they pretty much track each other each year up through 2020. Then their equity blew up from the merger, and their debt did come up, but not as much as their equity. So it looks like they have a decent balance sheet. And they keep very little cash on their balance sheet, less than $500 million. Their next dividend date is June 17th. The ex-dividend is June 3rd. They were paying a 2.8% dividend in 2014. Then it got to 1.4% in 2019. It's finally over 2 again. The forecast is 2.3% by 2026. The CEO's salary went from $750,000 to $1.5 million. It seems like all the CEO's salaries are doubling. Total compensation $20 million, tenure as CEO 3 years. There's been one insider buy, a few insider sells. 85% of the company is owned by institutions and 15% by the general public. Their biggest shareholder is Vanguard at 12% and BlackRock Capital Research. And the list goes on with lots of big companies. Their employee count went from 14,000 up to 50,000. And the ticker trades on the New York Stock Exchange, Deutsche Börse, London Stock Exchange, Wiener Börse, Mexican Bolsa, and Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks so much.